Hello, good morning or good afternoon, everybody, and welcome to our Trevisa Financial EEP training webinar. All right, let's go ahead and get started. Today, we're going to go over our Earned Equity Program, and this is going to be our introduction for those of you who are not familiar with it. And those that are will have a Q&A at the end to see if you have any questions regarding the program, scenarios, guidelines, all the good stuff. First of all, a little bit about me. Monique Manaya. I have been in the mortgage industry since 1997. I have done everything from being a broker, retail, wholesale, loan officer, processor, LOA, production manager. And one other thing about me is that I was over at the investor that brings us this program. I helped them further develop it with processes, policies. I was on the underwriting guideline committee. So I definitely have a plethora of knowledge regarding and surrounding this program. And I love this program to death. So I'm so glad that you're here joining us to learn more about it. We also have a few others on our team, amazing, wonderful people. We have Sherry Hatcher. She's our AVP of TPO operations. And she is one that will help get you through we utilize TPO as our platform, and she has all the ins and outs on getting you set up, trained. Myself also will attend those trainings along with our account executive team, which includes Ben Slayton and Norma Summers. All together, we bring you Ben has 60 years in the mortgage industry, the real estate industry. So I know Shari has been in the industry since 93. I'm not 100% sure about Norma, but I think we all combined bring you about 150 years worth of mortgage industry knowledge. So at Travisa Financial, we're here to bring our innovative loan programs to you so that together we can better serve the first-time home buyers and help them to begin to create equitable wealth through homeownership. That is one thing that a lot of people can gain for their future, is the wealth from their equity in their home. And for those that just can't take advantage of it, it's something that can be detrimental for their future. And so this is definitely something that will help build that wealth for not only them, but for their generations to come. All right, let's dive into this earned equity product. What are all the ins and outs about EEP? We're going to look at the highlights of the program, and then we'll discuss more about how it works and all of those details. Some of the greatest highlights of this program is low down payments. Low down payments at 3.5% for not only US citizens, but for non-permanent residents, DACA, and ITINs. We have low and no credit scores. We have them down to 580, and we also allow for alt trade lines. 3 months bank statements is huge. Most lenders require 12 months, but we have 3 months bank statements for income qualifying. And this is not only for self-employed borrowers, but this also is for wage earners. This is for your 1099 borrowers. And so in addition to allowing only 3 months bank statements for that entire category of income sources, the DTI is also 50 over 60. We don't have any source or seasoning of funds to close, and gifts are okay. So receiving gifts from also multi-source. So if you have a few different family members that want to pull it all together, that's completely okay as well. For BKs, we do allow bankruptcies. We just ask that the discharge is 1 day out of discharge prior to closing. So you can get the transaction started, they can find their home, be under contract, go through processing, underwriting, and then we just want to see that discharge occur 1 day prior to the closing on the home. We take all FHA property types, 1 to 2 units, PUDs, manufactured homes, and condos. The one thing that I would like to specify about the condos is to make sure that it is FHA approved. So when you do have a home buyer that is looking at making an offer on a condo, look it up and let's make sure that it's approved. If you need assistance from us in helping to look it up, we're more than happy to do that for you. Also, seller contributions up to 6% of the sales price. This will help reduce the out-of-pocket needed from the home buyer. So this will help make it even more affordable for them to get into their home. Okay, how does this all work? So there's a government entity, and I'm not sure how familiar you all are with government entities, but a government entity is allowed to purchase as many FHA transactions, non-owner occupied, as they would like. So we have our home buyer that does not qualify for the traditional financing. And so what we'll do is we'll get them pre-qualified for EEP. We'll have the home buyer go out and find a home. And then we'll do the underwriting and the processing. But once we're all set, where everybody's ready to close, simultaneously, as the government entity is closing on the FHA purchase transaction, the home buyer is signing a finance agreement. And this grants the home buyer full equity rights and the ability to live in and control the home. There is a memorandum of that homeownership agreement that is recorded on title. And so this gives them real security in the property. This tells them that, you know, this is something that I've signed the contract and it's just not floating around. It's actually recorded on title. In addition to that, they do receive a 1098 form at the end of the year. So they get to write all of that interest off. Just amazing benefits with this program. To dive a little bit deeper into how everything works, we have the government entity that is the main source here in this program. And the government entity is going to take out this FHA loan to pay off the home seller. In turn, the government entity is going to sign a seller finance agreement with the home buyer. So they're going to have a mutual relationship in this property. So when you're qualifying the borrower, we have so many different niches on this program. As mentioned, the non-citizen, such as ITIN, and people that need to use bank statements to qualify, as mentioned below, self-employed, that are writing everything off, or newly self-employed, gig workers, people that receive tips that, you know, they don't claim their tips. The W-2'd, and you know, those are for people that have not only the possibility of additional income through a side business, the gig workers that receive cash. So if they're self-employed and they're 1099 and they receive cash, just all around great bank statement program for everybody. We have the low and no credit scores with very limited, for those people that have very limited trade lines. If you have a 580 or higher, you only need to have one trade line that is active and satisfactory for 12 months. If you have no scores, if you pull a borrower that has no scores, then they can still qualify. We just need to have 2 trade lines that are active. And these trade lines all can be alt trade lines. They don't necessarily have to be reporting on the credit report. Again, high DTIs, 50 over 60, and gift funds down. So when we're looking at the total amount of funds to close, we're going to be looking at the down payment, the 3.5% down payment, closing costs, and their first month's payment. So as mentioned before, having 6% seller credit definitely will help lower their necessary funds to close. So when we're looking at qualifying the property, there's a few different things that I want to mention and go over specifically. Again, with the FHA property types, all FHA property types, if it's a condo, let's make sure that that condo is approved. And then we do require full FHA appraisals and home inspections. There's home inspections are required if the property is built in 1979 or older, and or if you get your appraisal back and the condition is a C4 or higher. So those are the reasons why we would need a home inspection. And also we require a certified home warranty. And let's keep in mind also that aluminum wiring is ineligible. I've had some cases in the past where they've been able to provide I don't know if you'd call it a repair, but they went in and they completely redid the wiring and were able to document that within 2 weeks after closing. So there's different exceptions and different little things that we can run by upper management, and I do have those contacts to see if we can get exceptions or if we can make things work for post-closing. Definitely just when you're looking at the home inspection, you're going to want to just be thinking safety. If it's a safety issue, then that's more than likely going to need to be repaired prior to close. But we do have an attestation form that if there are some minor repairs, then we can have the home buyer sign the attestation, just confirming that they are aware of the minor repairs and that it was suggested to them to get them repaired within 12 months of closing. So EEP is not a program out there, like I had mentioned before, where they just sign a contract and then it's just floating in air. It is recorded in its title, and the verbiage throughout the homeownership agreement gives them full rights to use, improve, and sell the property, gives them the tax benefits that as I had mentioned, full rights of appreciation, all of that's theirs. So if they decide they want to sell the home in 3 to 5 years, then all of that equity is theirs, and they get to either buy a new home or, whatever they want to do with it. So securing the client's rights. This is just another reminder that the memorandum of the homeownership finance agreement is recorded with the county. And so the development of the program, though, isn't necessarily that the Native American tribe wants to just purchase homes and have homes, under their books all across the country. Their goal is to help get people into homes that can't quite qualify, and then eventually they can then purchase the homes outright. There's a few different ways that they can do that. There is the assumption of the FHA loan. So as soon as, if they need a year or two, whether it be self-employed and they write off taxes or legal US citizen status, once they get all of that resolved, they can take over the underlying FHA loan payment from the government entity, or again, they can sell the property and 100% appreciation is theirs. And again, I know there's been a lot of talk and discussion about just doing a straight up refinance. The home buyer is not vested on title. The home buyer's, the homeownership finance agreements memorandum is recorded on title. And so this being said, there may be lenders in the future that will recognize our program and say, okay, you've been paying 12 months on time. This is recorded on title. And then there's a program to refinance them as soon as, they're credit qualified. That is not the case right now. I personally, and people that I have talked to, there is not a program right now where you can refinance the borrower out of this program. Currently, the two options are to assume the FHA loan, and then at that time when they are on title, they could do a streamline down to a lower rate if they are lower at the time, and or refinance out to a different program. And then of course, selling the property. Who do you want to be looking at when you're selling EEP and fitting that home buyer into our program? You're going to want to be looking at their I-10 status, their US citizen status, the self-employed borrowers that have, maybe the seasonal fluctuations, or they write everything off, or tip gig workers, 1099 workers that deposit a lot of cash. Anybody that's denied traditional financing, and people with the lower credit scores or do not have as many trade lines required for other programs. Those are definitely good candidates for our program over here at EEP. So speaking of I-10, our competitive market analysis here definitely shows you that we beat all of the competitors, no questions asked. From our down payment of only 3.5% to the 3 months bank statements, the max DTI of 50 over 60, and the credit score requirements of 580 with one major bureau. If you look at the other two lenders there, 700 plus credit scores, 43% DTIs, 12 months bank statements, and 15 to 20% down are definitely big. We do have other programs here at Trevisa. We have FHA, VA, conventional, USDA. We have some great down payment assistance programs that are forgivable. We have a 3.5% and a 5% forgivable DPA program. So make sure to reach out and ask questions about those programs if you're in need of using those. We also have a lot of resources. We're here to really help you succeed. We have flyers available if you want to market the EEP program. We can set up your own private training if you would like. If you'd like to do a training with your processors, your ops team, or even bring in some of your realtor partners, we're more than happy to do some private trainings and private meetings to help educate them more on the EEP program. We have our hotline, and we also have our email. So we have a dedicated email and hotline for any sort of questions that you might have, any scenarios that you want to run by. We want you to feel like, you're not in this alone. It's a very unique program. It takes a little while to get your head, wrapped around everything. And so we're here to give you that support 100% between myself, your account executives, and Shari. Okay, we have a question. Can we have a copy of the presentation for reference? Yes, so you're gonna get a copy of this entire presentation emailed out to you probably in about 3 to 4 hours. We're gonna have our marketing team put it together and send it out to you. But again, I'm willing to do any sort of, presentations that you want, so that if you have any realtors that want to ask questions, or processors that we can jump on and show them the process of TPO and how to get them submitted and structured, we're more than happy to do that as well. I do want to mention that when you are looking at trade lines, we do not accept authorized user trade lines. So unfortunately, we want the home buyers to have their own active trade line that has been open and satisfactory for 12 plus months. And this is just so that, we can see that the home buyer is actually building and paying on time to their own trade line. Hi, Maria, how are you?
Can you hear me?
Yes, I can hear you now.
Hi, I'm doing great. I have like 10 questions, but I think I'll just call you because I worked this program a little bit and I have individual questions for a lot of things.
Okay.
But how's your process? How does it work? What's the timeline?
So I'm going to quote you the same time. Okay, let me rewind. So like I said before, is I worked over at the tribe and the investor that works with them. And I was the EEP production manager over there, and I managed the processing, closing, funding. I managed the signers at the tribe and the title approval. And so when overlooking the process, the average loan that would go from start to finish was approximately 35 days. I know that they've had an influx of submissions, but they have recently hired a lot of individuals to staff up for how much volume they're now receiving. So I would even say maybe 35 to 40 days just to play it safe. It also depends on your home inspection and your appraisal. If they come back with repairs, depending on how long it takes people to get those repairs done, that can play a big factor into your turn time. But I would definitely say about 35 to 40 days.
And that is from the initial approval for the human buyer, correct?
Well, that is going to be from, yes, the approval with a property.
Okay.
Because we don't know how much time it might take them to find a house and put it under contract.
So that's after we get the contract. Okay. This
Yes.
is the same as the assignment, correct? This is
Yes.
where you go. Okay. Perfect.
Yep. So
Because
we
I'm
have
currently
to, go ahead.
No, I'm currently working with someone and I've done a couple of this. I mean, it's just a really great product. Again, I have a couple of questions, but I don't know if you can give me the or send me give me your my AE contact information so maybe I can reach out to him and kind of ask these questions.
Yeah, and you're more than welcome to reach out to me. I'm going to put the slide back on the EEP support center. So if you call this number or email this email address right here, these are coming directly to me.
Okay.
Just because of the fact that I really helped develop this program further than, and built it up and helped with policies, procedures, guidelines. I'm just able to answer the questions a lot quicker. And so if you want to utilize this, if it's, something that you need to know immediately or right away, then
Yes.
go ahead, please utilize these EEP support center phone number and email address that we have. But again, feel free to reach out to your account executive as well.
Yeah. Okay. And they will be they're gonna, if I call them, they're gonna be able to give me that information who my AE is gonna be.
What
Because I don't
company
have one yet.
are you comfortable telling me what company you're with?
Nixa.
You're with Nexa? Okay, so your account executive is actually Ben Slayton.
You know what? I think you sent me an email.
And you're going to receive an email a few hours after this webinar that will have his information on it again. At least I'm 99% sure that it will.
Okay, then I'll reach out to him and ask these questions. Thank you so much.
Yeah, absolutely. Well, I'm so glad you guys all made it today, and I look forward to working with all of you guys. Again, this product is very near and dear to my heart. I really, really love this program and believe in this program, and we're here to help you with whatever you guys need. So definitely reach out. Thank you so much, everybody. Have such a wonderful day. Thank you.